Do you want to buy UK assets here?
No, as you may remember, Alex, we've been structurally underweight UK equities and UK assets for, really ever since the referendum back on the 23rd of June 2016. Equities in dollar terms in the UK are still down over 20%, even with today's bounce. Think at where sterling was just a year ago. Sterling against the dollar was at 132. We've not even broken through that kind of level again. So I don't think this is a full endorsement, as your analyst was just saying to us, reporter was saying there. We still have a significant number of hurdles to clear, and the first of those really comes on Saturday. And until we're through that, then I think markets have really just put UK equities and the sterling back into that neutral zone where purchasing power parity is over 40% at 140, and coming down, you're going down to back towards 120 or even lower in sterling dollar cross rate. So we would still be very nervous.
So Ian, what I do think is interesting is what we learn when we get these big headlines is you get an immediate reaction to the upside, say in the cable rate, the dollar, 200-day moving average, move into EM, stocks getting a nice uplift, money coming out of bonds. Are we learning anything about the reaction function and the psychology of the market, and how do you ignore it?
In truth, the answer seems to be no. We aren't learning anything at all, Alex, because we get these pops and they last for a day, 2 days, 2 weeks, and we see that wish to see a rotation into value and out of growth. But the truth is, until we get the scope to deliver escape velocity, and we see the dollar a much weaker currency and the rest of the world starting to pick up more aggressively, then we are not going to escape this environment that favors growth stocks, defensive assets, and potentially just bonds and US treasuries.
Well, then walk me through what a reversal, say, in the dollar then looks like. I mean, so we're at 97. I'm just looking at the straight up dollar index. We're sitting around the 200-day moving average. Like, what do you need to see? What kind of breakdown do you need to see to feel better about risk?
Well, realistically, I think you need to see that dollar significantly lower, probably down towards 90 on the DXY, and that, and potentially even lower. Yeah, so it's got to be a big move. Historically, when you've seen these moves come that have really provided support for global growth, support for global equities, you've needed that significantly weaker dollar as a real driver. And the IMF Financial Stability Report just highlighted the degree of fragility that we still have in the global economy here. So, for us, even if we get some kind of resolution on Brexit, there are still no winners from Brexit, because we've still got a whole range of debates around the future arrangements, and that relationship between the UK and Europe will be fundamentally broken. And, that is not going to help global trade. World air freight is already down 6-7% year on year. These are the things that have to really turn around before we get excited again.